Why ignoring Bitcoin could be your worst mistake.
Welcome to our channel, where we bring you the most valuable financial insights. In this video, we will explore the rise of Bitcoin as a revolutionary form of digital currency and why it's a great time to invest. We will discuss the disruption it will cause in traditional finance systems, the impact of inflation, and the unique advantages that Bitcoin offers. Furthermore, we will analyze the significant growth potential and the increasing demand for Bitcoin in the global market. If you want to understand why ignoring Bitcoin could be your worst mistake, this video is a must-see. With the rapid rise of Bitcoin, it has become an undeniable force in today's financial landscape. Bitcoin, the first decentralized digital cryptocurrency, has witnessed a meteoric surge in value, catching the attention of investors worldwide. But what factors have contributed to its extraordinary success? 1. The rise of Bitcoin. Satoshi Nakamoto created Bitcoin in 2009. After the release of the Bitcoin white paper on October 31, 2008, and the first block of the Bitcoin blockchain, known as the Genesis block, was mined on January 3, 2009, shortly after the 2008 stock market crash. Nakamoto, who has remained anonymous, created Bitcoin as an alternative to traditional fiat currency and to provide a decentralized, secure, and transparent means of exchange. Nakamoto wanted to create a digital currency that could be used for transactions without the need for intermediaries like banks, and that could be easily transferred and stored electronically. It started as an experimental idea but has now become a global phenomenon. As more people became aware of its potential, the demand for Bitcoin skyrocketed, leading to a substantial increase in its market value. Today, Bitcoin is poised to revolutionize the financial world. 2. Disruption in traditional finance. The traditional financial system is known for its centralization, intermediaries, and limitations. Bitcoin operates on a decentralized network known as the blockchain, eliminating the need for intermediaries like banks. This disruption has created a more efficient and secure way to conduct transactions, making traditional finance systems look obsolete in comparison. Did you know that the credit card system was developed in the 1950s and hasn't changed much since then? When a purchase is made, the merchant contacts an acquirer, who routes the transaction through a payment network to the card issuer for authorization. If approved, the issuer pays the merchant, and the cardholder is billed for the purchase. This system relies on intermediaries such as the issuer, acquirer, and a payment network to facilitate and secure convenient transactions. Even though credit cards are convenient for the consumer, these payments may take weeks to settle and each intermediary charges a fee. Bitcoin also helps with remittance payments because they can be processed on decentralized networks, rather than through centralized intermediaries. This can lead to faster processing times and much lower costs than traditional money transfer methods. 3. Inflation, deflation. Rising inflation is a growing concern for many individuals, businesses, and governments. Fiat currencies, such as the US dollar or euro, are subject to inflation due to a broken system of excessive printing of money, ensuring that the people closest to the money printer gain the most. Jeff Booth says that we're supposed to benefit from technology doing the labor as prices fall to the marginal cost of production. The problem is, we live in a system that has convinced us that we have to work more and more and more to be able to get more. According to Jeff Booth, deflation is a natural and necessary process in the economy, as it allows for the release of economic bubbles and the reallocation of resources towards more productive uses. He argues that central banks' attempts to fight deflation through monetary policy can actually exacerbate economic problems, leading to asset bubbles and economic instability. 4. Unique advantages of Bitcoin. Bitcoin offers several key advantages that set it apart from traditional money. Financial inclusivity. Its digital nature enables anyone with an internet connection to participate in the global economy, bridging the gap for those without traditional banking access. Transparency. Blockchain technology ensures secure and transparent transactions, safeguarding privacy and reducing the risk of fraud. Deflationary asset. With a capped supply of 21 million coins, Bitcoin acts as a deflationary asset, safeguarding its value against inflation and functioning as a digital store of wealth akin to gold. Digital convenience. Bitcoin's digital format facilitates effortless storage and transfer, enhancing convenience, portability, and accessibility compared to physical currencies. Effortless storage. Ownership of Bitcoin is stored securely on the blockchain, alleviating the need for physical storage like safes or banks, streamlining management. Digital transfers. Bitcoin moves seamlessly between users through digital transactions, recorded on the blockchain for transparency and security. This expedites international transactions without currency conversion hassles. Convenient accessibility. Bitcoin's 24/7 accessibility via digital means users can manage holdings and conduct transactions anytime, anywhere, without physical banking constraints. Global transportability. Bitcoin's digital nature permits easy borderless transport, making it akin to carrying wealth in your pocket, unlike physical currencies or gold subject to restrictions and exchange hassles. Inclusive accessibility. With only an internet connection and a compatible device, Bitcoin is accessible to a broader audience, potentially bringing financial services to the unbanked or underbanked populations. 5. The fourth halving and growth potential. The fourth Bitcoin halving is expected to occur in April or May of 2024. The halving will reduce the block reward from 6.25 Bitcoin to 3.125 Bitcoin. This is the reward the miners receive when they compute the Bitcoin transactions. The halving policy is written into Bitcoin's mining algorithm to counteract inflation. Less Bitcoin rewards in the past have meant that the price has increased in value if demand remains the same. So far, Bitcoin price has significantly increased after each halving event. The last Bitcoin halving is estimated to take place in the year 2140. The growth potential of Bitcoin is immense. As more businesses and institutions recognize its value, they are starting to accept Bitcoin as a valid payment method. This mainstream adoption over time leads to a significant increase in demand for Bitcoin, further propelling its market value. Moreover, with the increasing interest from institutional investors like BlackRock, Fidelity, ARK Invest, and others, Bitcoin is likely to experience even greater growth in the future. With all that said, there are still risks involved which must be understood when considering Bitcoin. Bitcoin is considered a risk asset and is subject to extreme price volatility. Regulatory uncertainties exist in many countries, and changes in government policies can impact Bitcoin's legality and use. Security is another concern, as hacks and scams can result in the loss of Bitcoin holdings. A long-term approach is considered prudent, along with increasing your knowledge of the technology, storage, and general information about the asset. However, Bitcoin has demonstrated great staying power over the years and will likely weather the storm of regulation, scams, and policies. Although there are many other crypto coins, Bitcoin is the most decentralized, with a capped supply of 21 million and excellent liquidity. If you've been contemplating investing in Bitcoin, the time is now. The best time to invest in Bitcoin was 15 years ago. The next best time is now. Its rise, excellent blockchain technology, protection against inflation, upcoming halving, and tremendous growth potential make it a worthy consideration.
Stay tuned for more financial insights, and don't forget to like and subscribe to our channel.